Hello, good morning. Good morning, ladies and gentlemen. How are we all doing today? Uh-oh, I think I'm having audio issues. Can you hear me? Okay, hold on a second, please. Let me sort this out in a moment. Okay. So I'm trying to set up my microphone as I'm not getting any audio here. So I would like us to please confirm that you can hear me by typing hi in the comment section so that we can get this started. I would like to see some feedback, please. If you can hear me and can see my screen, kindly type in probably hi in the comment section so that we can get this started. Okay, so what do we have here? All right. Thank you, Mahan. Good morning to you. How are you doing today? And trust you're having a wonderful day. I'm very sure you're in the morning there. All right. So excited to welcome you to another promising session on my morning live, as we are going to be taking a technical dissection of the current market structure in order to be able to identify trading opportunities lining up for us today. The week started on a bullish note for the dollar, but during the course of yesterday, we saw how the dollar became unpopular in the market, as we can see that the reflection of the banking crisis still feels uncomfortable amongst investors in the market. And as a result of this, we begin to see some traction in that regard, where the gold appeared to have been a safe haven for some time. And then at the same time, also, we saw the USOil begin to gain some bullish momentum, giving us a platform upon which we could actually look out for buying opportunity today. And as usual, what we normally do when we start the day is to ensure that we keep tabs with the fundamental perspective in the market. So looking at the economic calendar today, we really do not have any macroeconomic event that we want to be looking forward to today. So today is 29th of March, and the only high impact event we have today is the AUD, and we don't have the AUD on our watch list for this week. So we are going to be skipping the economic calendar. So we shall be diving right into the business using our technical skills to identify potential trading opportunity this morning. So with that being said, here let's dive into the chart, and the first commodity we are going to be looking at this morning is the US oil. And on the US oil, if you recall, we have been profitable this week, as on Monday we took advantage of some trading opportunities here where the market gave us about three positions here, and we were able to scoop over 800 pips in profit on that one. And during the course of the live session yesterday, we identified a simple setup around here. Let's zoom in to see what is really going on around this structure. So this was what we saw during the live session yesterday. We saw as soon as price got into that resistant line at the $73 level, we begin to see selling pressure, hereby price action transitioned into a flat channel. And you all know what we look out for whenever we have this kind of channel. We want to see a breakout or breakdown of that channel for trading opportunity. And what happened, I think during our live session yesterday, I think we had the breakout of that structure. During the live session yesterday, we saw the breakout price action drop to the downside here, taking us out of the position. And remember, we are still looking forward to another opportunity above that level, and we saw price action triggered during the New York session yesterday, and on this point we had the bullish momentum to the upside. Then we also had an opportunity to add more position to our existing trade at the retest of the $73.50 level. And these are structures which I shared on my public platform yesterday. Let's quickly run through that so that we can be on the same page here. So during my during the trading session yesterday, I did some couple of updates on my public platform, and here we are on the USOil. Okay, all right, okay, this is when we started buying. Then we saw the consolidation phase here. This was prior to our live session yesterday. Then we took advantage of the breakout of that structure. Price action took us out of all positions here, and we were anticipating a breakdown of that area if we see a successful breakdown of that structure, but that did not happen. We saw the breakdown, but it was so sharp that price action climbed to the upside one more time, and we saw this situation here with a buy stop order above the $73 level. We had a position triggered, and at this point here I shared during the morning session today, I saw the situation here where I told us all to anticipate another breakout of the $73 level, $73.90 area, which has been a selling niche for participants in this market in the last 10 to 15 hours on this chart. Now going back into the live chart here, looking at what structure we have here, which is around the $73.90 level, you can see here that since the New York session yesterday, we have been witnessing some selling pressure just right around that area to give us a clue of the presence of sellers in this particular market. The same thing also happened during the early hours of today, and a couple of hours ago also we saw sharp rejections of that structure. But if you had actually bought at that point, it's okay. There is nothing bad at all if you had bought at that point, though you will be in a loss at this particular point in time. But I'm of the opinion that the bullish momentum here seems to be strong enough to break out of that $73.90 level. So if you had bought around the $73.90 area, well, you want to be having your stop loss somewhere around the $73.50 level, which happened to be a support line in the past. So you should be having about 40 pips stop loss on this one. So for those who are still in the buy position that we took advantage of right here at the $73 level, I will be suggesting that you move your stop loss to secure your current position, and the most appropriate area could be somewhere just right below the structure here, probably somewhere around the $73.45 level. Secure your position, as we never can tell, the selling pressure here could incite a bearish momentum to the downside. So on the US oil for today, we still hold on to a bullish bias on this chart as we wait for price action to break out to retest that $73.90 level to give us an opportunity to buy in this market. Now, to make things a little bit easy for us to be able to position ourselves and at the same time give us a level of comfort to be sure that we should be in this trade or not. So what I will be doing here is to bring out my line chart, and then we want to be connecting the series of higher lows here, which for me at this point will be let's pick this low here, and should I pick this one? Okay, so we have this low here, we have a low here, we have the structure here. So we are still going to be doing some readjustments in that regard when we bring back our candle chart. So this is the candle chart now. We just do readjust this, and we should make it a little bit thicker so that we can emphasize the importance of the structure right here. So going into the UK and the New York session today, we already have a trend line which we shall be using to guide our trading activity. And what this simply means is that if price action continues to trade above that trend line, we shall feel comfortable in our buy position. But if the trend line at any point in time breaks to the downside, then we should be anticipating a sell momentum in this market. So that area will be our guide here. So we have the $73.50 level coupled with that bullish trend line to guide our trading activity. So, and you can see the structure here. It shares a beautiful confluence here. So what this simply means is that if price action still continue to find buy pressure around this area, we'll still feel comfortable in our buy position, and a further breakout of the $73.90 level will definitely be welcoming additional position in this market. However, if price action drops below the $73.50 level, remember, we are not getting too excited. Though we have a bearish signal, we are not getting too excited. We want to remain patient at this juncture, wait out for possible retracement into structure, which shall be giving us a confirmation of the strength of the sellers in this market. So what we are going to be looking at is price action coming back to retest the trend line or the $73.50 level. But the most important pattern or structure we want to be seeing is continued selling pressure below this area, where buyers find it difficult to break above the $73.50 level. Then we shall see this as a beautiful confirmation to join a bearish momentum to the downside. And if we are going to be selling in this market, it is quite obvious that this is more or less a counter trend opportunity. And if we take into consideration what has been happening here since the beginning of the week, you will see that this is a bullish trend line here, which has been guiding our bullish momentum since the beginning of the week. We might likely see a situation where price could drop back into that structure to anticipate another wave of bullish momentum to the upside. And if it so happens that price action breaks down that level, then we'll have no choice than to start thinking of adding more sell position to our existing trade. But I will be jumping in the comment section as usual to give you an update if anything strange happens in this particular market. And that trend line, which I highlighted earlier, that is serving as a support line since the beginning of the week, also shares a confluence with the $72.50 level. So if price action ever breaks down both the trend line and the $73.50 area, we shall be looking out for selling opportunities with TP target somewhere around this area. And if the sell momentum is strong along the way as we approach the $72.50 level, we might extend the TP accordingly. Then wait out and see how price action will be reacting to the $72.50 level to decide if we are going to be adding more sell position or getting ready to join another wave of bullish momentum in this market. So let's be on standby. We have a critical juncture here if price action ever breaks down that $73.50 level. So that is my view here on the US oil for today. If you do have any questions regarding what I just explained so far, or you need me to make further clarification, well, feel free to drop your comments in the comment section, and I assure you I'm willing to be of help in that regard. So that is that on the US oil. A very simple setup here, and let's keep tabs on that one. So moving on now, we are going to be moving on to, hold on a second. Okay. So we are going to be moving on to the next pair, which is going to be the GBPUSD. And in fact, on the GBPUSD, I'm yet to open a position on this pair. And the reason is this. Remember what I told, we agreed on here yesterday regarding the GBPUSD. We emphasized the importance of this trend line here, remember? And I told us all yesterday that if price action ever breaks down the 1.22100 level, we shall be getting ready to sell the GBPUSD. But one thing we saw here was that price was not really comfortable below the 1.22100 level in the last and then during the New York session yesterday, as we saw our price action took us out of this sell position earlier and continue to find higher highs. And I told us all that despite the fact that we see any buy pressure around that area, we should not be jumping into any conclusion to buy the GBPUSD at that point, as we need a significant confirmation that the buyers are gradually getting stronger in this particular market. And what I said we should be looking forward to is price doing a breakout of the 1.23500 level, a level. If you look at what has been happening around this area since last week's trading session, you can see how the presence of the sellers is very evident around this area. And the same thing happened here yesterday. We saw selling pressure as buyers were finding it very difficult to break out of that level, which for me at this particular point further emphasizes the strength of the sellers at this particular point. And throughout the course of the midnight till this morning, we saw price action continue to drop to the downside here. If I had been awake, probably I would have taken a position here, but this time around is a midnight over here in this part of the world, so I wasn't on the charts, and we saw those bearish move to the downside. And I shared an update this morning on the GBPUSD. Let's run through that and what I said here. Let's hold on and see what I said here this morning on the GBPUSD. So today, so I just scroll down to today. So okay. So I said there are no position triggered yet as selling pressure continues from the 1.23500 level. We shall be discussing this in detail during our live session today. So with the situation we have here, if we look at what has been happening since the beginning of the week, you can see that price is within an ascending channel here, where price action had consistently found higher highs and higher lows in this particular market. And if we go to as far back as last week's trading session, we saw the breakdown of this bullish trend line, which I laid emphasis on during our live session yesterday. And if you had watched my video during the course of the weekend, I shared this in detail. I talked about this in detail on how important the breakdown of that bullish trend line is. And if you look at the current structure here since the beginning of the month of March, you will see that this is the first time price action would ever at breaking down that bullish trend line. And you know, from a technical standpoint, whenever we do have a breakdown of a key structure like this, we expect that one point in time price is likely going to come back and do a retest of that structure. And since the beginning of the week, though we had some buying opportunity at the beginning of the week, we can see that as soon as price got into that trend line that was broken last week, we begin to see selling pressure at every point in time price action test that structure. And this has led to a sell momentum, seeing price crashing further to the downside, respecting the ascending channel. And at this point, we are at a critical point in this market where, for me, below the 1.22100 level seems most appropriate to be selling the GBPUSD at this point. So since buyers are finding it difficult to break out of the 1.23500 level, so they have had attempt multiple times since last week to break out of that structure, but it seems the presence of the sellers around this area has been negating all their attempts. So in this situation here, I will be holding on to a bearish momentum here with a key level sitting at the 1.22100 area that will be guiding our trading activity for today. And to sell, and this further shares a confluence with that bullish trend line here. You can see the bullish trend line that we have here, which has been supporting the bullish momentum since on Friday last week. This is the bullish trend line here, and you can see it shares a beautiful confluence with that 1.22100 level. So one thing for me here is we have a sell stop order here, and if you do have a sell stop, your sell stop order must have been triggered at this particular point in time. And where will our stop loss be here around this area? We want it to be around the resistance line here at the 1.23500 level, somewhere around that area, just to protect our portfolio against any further risk on this one. And that will be dovetailing to about 30 to 35 pips maximum on the stop loss for this current trade. So let's see how far this bearish momentum is going to go. So we should have a position looking something like this. And then where will our take profit target be based on this current structure? Well, for me, at this particular point in time, we could be looking at the 1.22, hold on a second, 1.2200 level, which will be dovetailing to about 100 pips thereabouts approximately. So let's see how far this bearish momentum will go. So for today, as long as price continue to trade below the 1.22100 level, we shall feel comfortable in our sell position. And mind you, there's going to be a situation where after the breakdown of that structure happen, there is still a tendency that price will at one point in time come back to do a retest of structure. It could be the retest of the 1.22100 level, or the retest of that trend line that was broken before another wave of bearish momentum happens. So if at any point in time we start seeing buying pressure come in at one point, let us see it as a retracement phase of that breakdown of structure. So we don't need to panic or worry about that. As long as it's below that trend line, we feel comfortable in our sell position in this market. So on the GBPUSD for today, we remain bearish on this chart. And if you have any questions whatsoever, feel free to drop your inquiries in the comment section below. Then to further buttress the to further make things easy for us during the New York session today, that is, sometimes when we get caught up in sporadic price movement, we might get confused and don't know what to do. We might not be sure if you need to stay in the trade or you want to get out of the trade. So to further help us to be able to feel comfortable, we want to be having a trend line identified here. So what this simply means is that if price action breaches that trend line, then we want to be getting out of that trade. So if we connect the series of higher lows here, looking at the price action since the early hours of today, so we have the simple structure here. So I'll be giving this a lighter pixel at this point, and let me give it a red color to emphasize its importance for today. So I go back to my candle chart, do some readjustment to suit the current market structure here. So for today, we have this trend line to guide our trading activity. So we might likely see something like this: price action goes up, comes back into structure, retest, selling pressure resumes again, then we could continue to the downside at this point. So this is what we shall be looking at for today in terms of selling the GBPUSD. But if anything like a break above of that trend line happens, price action climbs above that structure, then definitely we want to be out of that sell position. And remember, we are not buying yet unless a breakout of the 1.23500 level happens. We are not going to be buying this GBPUSD at all. As long as price remain below the 1.2350 level, we are not buying. We want to see a breakout where price action takes out all the sell position at this juncture, then we shall feel comfortable buying the GBPUSD anytime this week. So in that regard, let's keep our options open. We have a sell position triggered right now, and if price action continues to the downside, we also have key structures here with potentials of adding more trading opportunities to this trade. So we have the 1.22800 level where we could add more position at the breakdown retest of the structure. We also have the 1.22500 level where we can also add more trading, more sell position if price action ever breaks down the structures. So be rest assured that I will be jumping in the comment section on my TradingView platform to give you an update whenever it is very necessary. So that is that on the GBPUSD. If you have questions, feel free to drop your inquiries in the comment section while I move on to the next pair. So the next pair we shall be looking at this morning is the XAUUSD. And on the XAUUSD, I actually missed out on a trading opportunity here during the early hours of today. Though we have been profitable on this pair so far this week, let's quickly run through how the week started for us on the XAUUSD. So we are at a situation here at the beginning of the week. I hope you can see my chart clearly. I'm trying to zoom it out a little further so that I hope you can see the figures and the structures here clearly on your screen. So we had the situation here at the beginning of the week where price action was initially caught within this channel, just right within the $1,980 level and the 1,970. And we had this consolidation phase here, and within that consolidation phase we saw signals, we saw signs that sellers might likely come in this market. But one thing for sure is that you all know what we do whenever we have this kind of simple channel. We want to see price action either do a breakout of the channel for buying opportunity, or a breakdown of the channel for selling opportunities. And with our sell stop order below the structure and our buy stop order below the structure, we had our sell position triggered here, and in fact price action moved about 250 pips in our favor before we started seeing this bullish momentum began during the New York session on Monday. And one thing we observed on this chart yesterday was the fact that we begin to see some buy pressure coming in at this particular point in time. And I told those who had sold the XAUUSD around this point, the 1960 yesterday, I told us all to secure that position, as we might likely see some bullish momentum come in. And the reason why I said that is simply because of the buy pressure we noticed at the 1944 level during the New York session on Monday. And one thing I said is that we need to be very, very careful, as we might likely see a situation where price action will find it difficult to find a new low. And if we don't find a new low and price action finds a higher low here, definitely that's a signal that we might be in for a possible bullish move. And to further guide our trading activity yesterday, we were able to agree on a setup that we want to be using to guide our trading activity. And one thing I told us all yesterday, if price action ever does not find a lower low here, we might likely see a structure that looks more like a double bottom structure, as you can see here. And we had the neckline around the 1964, where I said a breakout retest of that 1964 will be welcoming a buy position in this market. And as you can see what happened, and to further buttress this structure here, the potential reversal pattern here, we extended the trend line that has been supporting this bearish momentum since the beginning of the week. And we said if the bearish trend line is breached as well, even if it is breached, it will have breached the neckline of that reversal pattern, that a breakout retest will be welcoming a buy position. And as you can see what happened here during the New York session yesterday, we saw the breakout retest of structure, and in fact price action moved over 120 pips in our favor before the sell pressure resumed. And I shared this in detail on my public platform here, where let's quickly look at that quickly. So on my public platform, we had this figured out yesterday. Hold on a second. Where is that? Yesterday is 28. So we are going to be looking at 28. All right. So this is yesterday morning, and okay. Hold on a second. All right, so this is the structure we identified during our live session yesterday. We had a 30-minute outlook, and on the 30 minutes time frame, we saw this bearish trend line, which was after connecting the series of lower highs here, and we had key structures here like the 1956.50 level, 1950, and the 1945. And one thing I stated here during our live session yesterday is if price action ever breaks out, reaches the 1956, then we want to be joining that bullish momentum to the upside from that area. And that was exactly what happened here. As you can see, we saw that huge bullish engulfing candle springing out of that structure, which triggered our buy position yesterday, and we continue to add more position. As you can see here, I told us all to anticipate a breakout of the 1964, which happened to be the neckline of that reversal pattern we identified earlier. So that means we are taking advantage of the bullish momentum even before it got to the neckline of that reversal pattern, hereby making us maximize the profit on that single move. And as you can see here, we saw price action break out again the 1964. Price action continued to the upside. In fact, we had two positions running here, and at this point we had price move to as far as the 1976 on both positions at this point. So we were able to make about I think about 150 pips there about on this one. And for those who are taking advantage of this opportunity, well done to you. Kudos to you for being on standby to have caught that move. And with the situation we have here, we saw some sell pressure resume here. In fact, you know what happened here yesterday? I saw the sell window around this area, but it was quite late in the night, and I felt I would not be able to monitor price action around this area, so I decided to stay out. And this morning when I woke up, I saw our price action had moved about how many pips that is, about 130 pips, which we actually missed, but it's okay. We still have some potential or trading opportunity based on this current market structure. And for those who are taking advantage of the buy position yesterday, well done to you for being on standby. Kudos to you. And for those who identified the sell position here, which lasted about 12 hours here, well done to you too as well. So right now, with the current situation we have here, you must have been out of your buy position by now, as you definitely had moved your stop loss to secure your position, and the sell momentum that began during the later part of the New York session would have taken you out on all your positions in profit. So with the situation we have right now, we don't have any positions running right now. And what do we think? How do we intend to take advantage of any trading opportunity based on this current market structure? Now, if we look at the things here, we saw the breakout of this trend line here yesterday, which is a key structure. We saw price action break out of that trend line, and you all know from a technical standpoint that there is a likelihood that price will come back and do a retest of that structure, something like this. Price coming back to do a retest of structure before another wave of bullish momentum happen. But personally, I doubt if that is going to ever happen in this market. But if it does happen, we want to be on standby to catch that move. So that is why I always say that we want to be as fluid as possible, even though you think it's not going to happen. But if it does happen, you are ready to be able to take advantage of that move. So I doubt it will happen, but if it does happen, we want to be part of that move. But the situation right now is showing us how price action has been trading just right around the 1,964 here in the last 3 hours. So for me personally, I will be advising us to remain patient at this particular point in time, as we never can tell. Price could climb back up the structure. As you can see, we had the neckline of that reversal pattern at the 1,964, and one thing we could see here after the breakout of that neckline, let me give you a visual representation of what I'm talking about here so that you can have a better perspective into what I'm saying. So since the impulsive move here started on Friday last week, we saw price drop into the structure. We saw price action transition into a reversal pattern in the form of a double bottom structure, where the neckline of that reversal pattern falls exactly at the 1,964. Now, with a breakout of the neckline area, you all know from a technical standpoint, we expect that after a breakout of a structure like this, price action is likely going to come back, do a retest of that structure in anticipation of another wave of bullish momentum to the upside. But what we have seen here is a slice through of the 1,964, hereby giving us a sign that we might likely be seeing a bearish momentum coming anytime soon. But for me at this point, looking at it from a theoretical perspective, I will want us to hold on to that bullish bias. That is, if price action ever comes up, climbs above the 1,964 with some rejection of that area where sellers find it difficult to drop below that 1,964, then we could be looking out for another buy opportunity to join another wave of bullish momentum at this point. So let me delete the sell window here so that we don't get distracted with it. So if that happens, that price climbs above the 1,964, I want to be looking out for buying opportunity. And one more thing to further buttress the potential bullish momentum in this market is when you look at what happened here since Monday, we saw that the lowest point price action has ever been for this week is the 1,945. And since then, price has been finding higher lows and higher highs in this market. So we have a higher high here, we have a higher low here, and then we have a higher high here. So I'm hoping that we're going to have another higher low here around this area. So because of this situation here, because of the higher lows here, I connected the series of higher lows. So we have this, I will be calling it a temporary bullish trend line in the meantime, as I will be seeing, I want to see how price action will be reacting to that structure. And if I extend the 1,956 level, that area where we bought yesterday, if I extend it further into the future here, you will see that it shares a beautiful confluence with that bullish trend line here. So one thing we are going to be doing in this market, we want to remain very, very patient here, as we might likely see a situation where price will go through some consolidation phase before a significant breakout will happen. So we might see a consolidation phase between the 1,964 and the 1,956 for quite a while before either a breakout to the upside to trigger a buy position, or a breakdown to the downside to trigger a sell position in this market. And if a sell position happens for a further breakdown of the 1,945, which happens to be the lowest point price action has been this week, is a further confirmation to join that sell momentum to the downside. In fact, if the 1,945 is broken at any point in time, I'm of the opinion that it's going to be a massive move to the downside. So let's be on standby for any of these opportunities as price action is being monitored at this point. But be rest assured that I will be jumping in the comment section on my TradingView platform to give you an update, whichever case it may be on this current market structure. Now, if we are going to be anticipating the buy position above the 1,964, that is, if price respects the neckline area and continues to the upside, I want us to look at a simple setup that we can use to feel comfortable whenever we are already in that buy position. So in that regard, if we scale down to a much more lower time frame, like the 50 minutes time frame, we should be able to see a setup that we can use to guide our trading activity for a buy position in this particular market. Now, if I bring out my line chart here and try to connect a series of lower highs, that is trading activity since the beginning of this morning, you will see that we have something like this. We have a beautiful bearish trend line here, which I want us to use and take into consideration while we look out for buying opportunity in this market. And you remember that the 1,964 is the neckline of the reversal pattern that was broken yesterday. I hope you are with me on this one. So what we are going to be looking forward to at this point is if price action breaks out of the neckline of the trend line here, retest of structure, we want to be buying at this point. In fact, if we look at the structure here, it's looking at see if price action is finding a reversal pattern here. As you can see, price is finding higher lows here. We have not seen a structure that broke down the previous low at this point. So I'm of the opinion that a bullish momentum might likely come in. So at this point, I will be advising us to have a buy stop order somewhere right above the 1,965 10-cent level. Let's give room for some buy pressure to happen around this area. So if we have a buy stop order around the 1,965 10-cent level, then we should be having a stop loss of about how many pips that is if price action finds the lowest point here. So that's like 65 pips thereabouts. So your stop loss below the lowest point here, and then let's see how price action will play out from that level. But if price action continues to the downside, breaking down the 1,956, like I told you on the 1 hour time frame, we look out for selling opportunities in this market. So the bone of contention on this chart is just right within the 1,964 and the $1,956.50 level, which will be determining if we are going to be buying or selling the XAUUSD for today. So be rest assured that I will be jumping in the comment section on my TradingView platform to give you an update in that regard. So with that being said here, let's scale up and go into the next pair. If you have questions, feel free to drop your enquiries in the comment section. So the next pair and the last pair we are going to be treating for today is the USDJPY. And fortunately for us on the USDJPY, we were able to make some profit, I think, during the early hours of today. And what did we see here yesterday? Remember, we identified a simple setup here. Hold on a second. Let me show you what we identified here during the live session yesterday. So this is what we saw during the live session yesterday. And remember the importance of the 131.00 level. I said a lot about this in my video that I published during the course of the weekend, and I implore that you watch that video so that you can have a better understanding of the background knowledge about that structure. So that level has been a very strong buying niche in this market for the last 10 to 11 months, and for me, this is a sign that this area is a strong demand zone. It has a strong memory for buying power, and as a result of it, I told us all yesterday that if price action ever climbs above that structure, we want to be buying the USDJPY. So we identified the 131.00 level as our yardstick for as our yardstick for trading activity yesterday. And one thing we said is that if price action ever breaks out of that structure, we want to be buying that. So with a buy stop order just right above the 131.00 level, we had our buy position triggered at that point. And since then, price action has been finding higher highs and higher lows in this market. Then we also had a structure at the 131.700 level. As you can see here, we also had another position triggered at that point. And I shared all this in detail on my public platform. So let's look at it quickly before we go into the details for today. So this is the USDJPY publication on my TradingView platform. So we bought the USDJPY at the beginning of the week, but we were taken out with some small profits after we saw the sell pressure that resumed here. And this was where we were doing before the live session yesterday. This was where we were. We saw how price action was caught within the 131 and the 130.500 level. And one thing I said here, I think 30 minutes later, I shared this update. I told us all that we are going to be looking forward to a breakout of the 131.00 area. As you can see, price dropped to the downside again, and I shared an update here. I think during the later part of yesterday, I shared this update here where I said we are going to be buying the breakout retest of the 131.00 level, and if a breakdown of the 131.550 happens, breakdown retest of structure, we are going to be selling. But what happened here with a buy stop order above the 131.00 level, we got our position triggered, and I also told us that we are going to be having another buy position at the breakout of the 131.700. So as at this morning, we had these two situations running. So if we go back to our line chart and calculate the price movement right now, we can see the first position is running with over 100 pips in profit, and the second position here is running with about 30 pips in profit at this point in time. So for those who are taking advantage of these opportunities, kudos to you for being on standby to have caught this move. And the next thing we want to be doing right now is to secure all our buy positions by moving our stop loss accordingly, at least to protect the current positions that we have right now. And for this current situation here, I will be suggesting that you move your stop loss to somewhere just right around the entry point of your second position here at the 131.700 level to secure this current position. And let's see how far this bullish momentum will go here. At this point, there is really not much to say here, just that the fact that we want to hope that price action will continue to the upside. And for those who had missed out on this opportunity, hold on a second, I want to extend this bullish trend line out a little bit. So we have this bullish trend line here. Let me thicken it a little bit. Okay, so and for those who had missed out on this opportunity, well, for me, what I'll be saying here is, since we had the breakout of the 131.700, we might likely see price do a retracement back into structure, and if it does do so and we start seeing buy pressure resume above that level, then we want to be adding or joining this potential bullish momentum to the upside. So on the USDJPY for today, we still remain bullish, and the bullish trend line here will be our yardstick for trading activity for today, as we still think price might still come back into that structure at any point in time. Now, what happens if price action drops below the 131.700? What do we want to be doing if this kind of situation happens? Well, if price drops below the 131.700 level, taking us out of all our sell or of all our buy positions rather, and we start seeing selling pressure below the structure, that is, buyers find it difficult to break out of this level, then we should be getting ready to sell. But if we are selling at this point, we need to be very, very careful, as we have a bust up around the 131 level. Remember, it's a very strong demand zone in the past, which also shares a confluence with that bullish trend line that we have here. So anything could actually happen from this area. We could see buy pressure resume to incite another wave to the upside, or we could see a situation where price action breaks down the structure to incite a trend continuation to the downside. So if we are going to be selling here, price drops below the 131.700, we need to be very careful when we join the sell position. As soon as price gets into the 131.00 level, we want to be moving all our stop loss to our entry point to secure the sell position, as we never can tell price could break down that structure. So that is that on the USDJPY for today. I hope I was able to make things a little bit simple and clearer for you to be able to take advantage of any trading opportunity for today. But be rest assured that I will be in your comment section on the TradingView platform to give you an update on what my expectations are if any sudden surprises comes in this market. In fact, I always do an update every hour on my TradingView platform, so you can always check it out to see these updates in that regard. So thank you, and it has been a wonderful moment with you guys. So I hope that we have another profitable day here, and I see you on the other side in the comment section on my TradingView platform as we continue to monitor price action. Thank you for watching, and I look forward to see you same time tomorrow. And please support this project by clicking the like button. Thank you very much as you do so. Do have a wonderful evening. Bye bye.